Good day, traders. This is Mdlalose all the way from Johannesburg, South Africa, and I'm going to be showing you my GBP chart this morning and the most important things that I look for when I start trading. As I always say that markets can actually turn anytime, and a downtrend can be a turn to an uptrend, and an uptrend can turn to a downtrend. That's why when it comes to trading, I always say that it's important not to have a bias, even though it's always safe to trade with the trend, but you must always be open-minded and make sure that when the markets change, when the market changes the direction, you also change as well. That's actually what makes it a good trader, to be able to close your losing trades and gladly take the trades on the other side. It's not like some of us, we don't lose in trading. We do lose trades, yes, it happens, but our losses, we cut them short and we make sure that we don't get emotionally attached to a position. If the market has turned to a downtrend or to an uptrend, we simply close our trade and actually look for trading opportunity in the current prevailing trend, which is very, very, very important. A lot of people do not really understand the fact that the markets can turn anytime, or when they analyze the markets, they have this thing of sticking to their bias and saying, okay, no matter what, the markets will do this, and the markets will prove them wrong. They'll be like, no matter what, the market has to do this. So sort of like being stubborn in actually exiting a losing trade and jumping on the current trend, and at the end of the day it leads to disaster. So I mainly trade the 15-minute chart, yes, but my analysis is done from the 1-hour chart and all the way down to the 15-minute chart. So the 1 hour, why 1-hour chart? Because it's easy to see the important levels on the 1 hour. Let me zoom out a little bit so that you can see. So before I go forward and start showing you this, ladies and gents, as I always say, subscribe. Make sure that you hit the bell notification button so that every time I post a video, you are one of the first people to watch my videos. Okay, now let's look at this. Okay, we're going to start with the Friday's high. Okay, today it's a Monday. This is the current trading day, and then we have to look at the Friday's highs. Why the Friday's highs specifically? The previous day's highs and lows are very, very important in terms of being key market turning points or key important liquidity zone, or you know what, they also act as support and resistance as well, if you want to put it that way, or supply and demand areas. You know, can give, there's a lot of titles on those, because we know here, this is where now we've got a lot of stop losses for the sellers, people that are still holding on to these sells. Very, very important. And then the Friday lows, unfortunately, you can clearly see the Friday lows were around about here, and they've been taken out. Yes, they've been taken out. The price is trading, it just gone below those Friday lows, and now they are no longer that much relevant. So the most important thing now is the current day lows, which is where the market opened around about here. This is the most important level right now. Also, I can potentially look at the Thursday's highs, Wednesday's highs, even though the Friday highs also coincidentally is the Thursday highs a high as well. It's actually on the same level. Can you see the importance of highs? That was the Thursday high, and then the market came back to that and it failed to break through, retested that zone, started falling back down. But you can clearly see the important level was these highs, which were Thursday's highs. So here I've marked the Wednesday, Thursday and Friday almost on the same level, and current daily lows. These, as I have said, they act as liquidity zones. That's where people will execute trade. That's where people will take trade. So it's very, very important to understand what the market will do when it hits those particular levels. It's very, very important to mark them before you start any trading day. So this is done regardless of any indicator, whether you're using a momentum indicator, whether you're using a trend line, whether you're using supply and demand zone, or stochastic oversold, overbought. it doesn't really matter. But the most important thing is for you to identify these levels first before you actually look for any trading opportunity, because these act like magnet areas, because that's usually where the prices are attracted. It's either the market will bounce off that level or will shoot through that level. So you need to be careful when the market is approaching that level. So for example, this is what I mean, right? If ever the market come and give me a buying opportunity, right here on today's highs, right here, let me mark this up quickly. Even though the market is just playing around that zone, I want to use a different color so that you understand what I want to explain to you guys here. So if the market breaks here and for argument's sake, okay, everything lines up and I get a buying opportunity, right? My first take profit or my first exit area will be at those Friday's highs. Very, very important. It will be right here on that liquidity zone, because it's either the market will come test this zone, okay, go up above that zone, possible take out the stop losses of people that were selling from Friday that are still holding on to their trade, hoping that the markets will keep on shooting back down, and then we might have a permanent reversal on that level, or a slight reversal before the markets actually goes back and hunt for the Thursday's highs as well. So it's very, very important. I mean, if you get a setup, I'm just making an example from there to there, that's 127 pips. That's a lot of pips. I'm just making an example, guys. That's a lot of pips on that particular. As an intraday trader, just 100 pips there, you're good enough. I don't care how much lot size you're trading, but as an intraday trader, you need to have a very healthy account, so that when you collect 100 pips or 100 points, it's good enough for you to be happy the whole day and start looking for other opportunities tomorrow. Trading is not all about collecting thousands and thousands of pips. Trading is all about collecting high probability valuable pips. Very, very important. High probability valuable pips. If you actually become consistent, even if you collect 20 pips a day consistently, you know what, you can actually make money in trading. The most important thing is the consistency and making sure that you follow your trading rules and not break them. So this is the situation on GBP dollar, and right now I haven't taken any position, even though there looks like there was possible sale. Not really. It's nothing. It's nonsense. I don't see anything happening right now. But let me go to the 15-minute chart and see exactly what is happening. Let's see. Maybe there was something. Maybe there is something. Blah 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 blah. Let's see. Okay, 15-minute chart. Zip zip zero. Nothing. 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 So the market is actually approaching this level. Now this is the most important level right now, where the price is going. So it's either now, currently we have a break, and then we have a retest on the zone, and then finally we are in an uptrend, because this is a market structure. So when it breaks this market structure with high probability and it closes above, comes back, retest, when it starts going back up, most probably if it takes out that high, it will be confirming an uptrend. Then you are happy to be buying. But I don't do this blindly. You need, I always say, is you need to have things like your volume supporting your trade, and you know what, yeah, especially the trend and the volume supporting this, then you are happy to be buying the GBP. But right now, I'm not saying GBP is going to go up. Just in case it breaks here and retest, and then we get the volume and everything lining up, we will be on our way up, which is very, very important. But for now, we're just going to wait and see what the markets will do. But in the meantime, in between your trades, you can practice this. Go and identify those zones. We can actually do it one more time before I stop this video, maybe on GBP JPY, just to understand. Even though this video specifically, I wanted to analyze GBP. I know GBP JPY, right, Friday's highs right there, bam. and then we've got the price actually taking out current day highs right here. Okay, there we go. Not really, they haven't been broken per se, but the price is actually there. And then finally you'll be looking to plot your today's lows, which is where the market opened, and possible maybe the the Wednesday's highs right there. But I mean, if it happens that the price continues to do whatever it's doing, of which now it looks like, yeah, we might be in an uptrend. Let's go to the 15 and see, try to get a clearer picture on what is happening. It's still on those on today's highs, and it's sort of like breaking those highs, but I don't think there's good enough volume for now. But we do this already. You can see our trend line, it's starting to slope up, which means that, yeah, you know what, if it comes back and bounces here, we sort of like in the beginning of an uptrend on GBP JPY, and also on dollar as well. Looks like the market is trying to actually go up, even though it's not convincing. You can clearly see the volume is dead. It's still 8:31. I mean, the market still has another couple of minutes before officially the bell opens. It's a trading day. So because of this, I'm going to just watch the charts and see what happens. But yeah, this is my daily analysis. As I always say, share this video with your friends, share with your family, share with your mentor. They might learn a thing or two from Mdlalose. Happy trading, happy trading.